Well, my name is Preston Blevins, and I'm a member of the Eco-Sustainability SIG at the ASCM chapter in San Diego. It's my pleasure to introduce an individual that I've known for about a year, and I've had occasion and the pleasure of dealing with him on a monthly basis. But he has an amazing background, and he's an out-of-the-box thinker that really thinks way ahead of most folks, and I like that. But Bert's topic today really is combining the best practices in running a business with environmental issues and concerns and how to solve them and how they all connect to the accounting and finance professionals community. And it's very, very important today to recognize that the money is now following those who can fix their environmental problems, get their emissions under control, their water consumption, etc. Has a master's in business administration. He then went on and got involved in ecological issues, became very expert, particularly on the marine side of the ecological spectrum. From there, he managed to wind up being an employee of the state of Washington, and he helped many, many companies, and I think over 100 companies, put together 5-year plans on how to survive the new requirements up in Washington. Washington has always been a leader in environmental issues, the state of Washington. Following that, the US government hired him for the International Agency on Economic Development. And he consulted on environmental issues in Asia and in South America with literally hundreds, if not thousands of entities. So he also is an inventor, and he's an individual that is very well versed in financial issues. He's an educator. He's created his own curriculums, and just a special person. So you're in for a great 1 hour. So I'll turn it over to Bert.
Okay, thanks. Fantastic. Okay, well, thank you very much for the chance to speak with you all. This is a subject that's near and dear to my heart because in 1991, when I joined the Department of Ecology, we were working with companies to try to help them reduce pollution by reducing the amount of toxic chemicals that their suppliers sent to them. And, you know, we kept going to them and saying, why are you letting your suppliers pollute you? And then you have to pay $500 per barrel to get rid of the leftovers because it's now regulated as toxic waste. And I joined the Institute of Purchasing Management for a year and worked with them. And this was 31 years ago. And also worked with people from Washington State and government because the state government had instituted a green procurement program. So this is a subject in which I've been involved for 31 years, and it's fun to come back and talk to people who know what I'm talking about. All right. So this talk is on sustainability accounting for supply chain management, finding ways to reduce risks and costs. Want to thank the ASCM San Diego chapter, and very pleased to be supporting their eco-sustainability initiative, which is on the ASCM San Diego website. And I encourage anybody watching this webinar to take time to visit that website and learn about the other nice resources there. So this webinar is going to be about 70 minutes long based on my practice run this morning. I'm going to try to shorten it a little bit, and we'll begin now. So my background, I'm a marine biologist by education training, and I came out to Washington in 1983, joined the Army Corps of Engineers as a marine environmental planner, which came back later on in my life to help me out. Went on to work with the Department of Ecology and the UN and the World Bank, and notably that I left off here, the US Agency for International Development, and I worked for them in 20 countries, mostly in South America and Southeast and South Asia. I became a professor at the Asian Institute of Management in the Philippines and in Lima, Peru. Went on to become excited about hydropower, coming back to my marine background, and invented some new turbines for canals and even for water faucets and hoses, so you could charge your phone while you water your garden. I've also started a new business called Sustainability CPE, and that's the name of the website as well, to develop webinars on this topic for continuing professional education. And I'm partnered with state accounting societies. And that's an area where this is going to come back again and again, is how the supply chain community can partner with the accounting community to make this a whole lot more robust and successful. And so my goals today are to get more reviews of this, because I'm a big believer in the total quality management approach of continuous improvement. And I hope that when we're done and you have a chance to look back on it, you'll maybe give me some tips on how to make this presentation better. I also invite you to be a partner with us at sustainabilitycpe.com, because we're developing new content and always looking for interesting ideas. So let's proceed. What we have today is we're going to cover 8 learning objectives. And I'll say, for those of you who are doing any professional training, it turns out that designing your courses so you can have 8 6-minute modules in an hour is ideal for a world in which now everybody's learning by watching their phones for 8 minutes at a time while they wait for something else to happen. So we'll talk about what is sustainability in general and in business, to make it very specific. Where did it come from? And this goes all the way back to the SEC formation in 1933, in the Great Recession. We'll talk about who's using sustainability accounting, and in some parts about where to find those who are using it for supply chain assistance, who comes up with the standards and the guidance, and then a financial reporting framework for this, because as you'll see, the SEC is going very likely to make some aspects of sustainability accounting mandatory in financial statement. And that's going to make a big impact on public companies. Then we'll dive directly into very specific supply chain resources from organizations that have been publishing stuff on this for 30 years, and you would never guess who they are. And also a hidden trove of business sustainability solutions, looking back through the programs that have run for the last 30 years, and how did they describe their approach, and what were the keywords they used to label them. If you don't know the keywords, which most of you haven't ever heard, you won't know where to find these documents. And so I'll show you where to get them. And then finally, with a pretty short section on just the process of engaging suppliers, and some final thoughts on what I've seen being particularly effective. And each one of these is about a 6 to 7 minute module. Now, we're going to be referring to a lot of documents during this presentation, and putting it together, I did a lot of background research to catch up, because there's always new stuff. And I've created this catalog of 125 publications on sustainable business and different topics on accounting and on auditing and on greenhouse gases, et cetera. These are all free for download and produced by public organizations, so you're free to share them. And all you got to do is look up the title to find it. And you can get this Excel spreadsheet, which is a catalog, off of the Sustainability CPE website for free, so that you can always have it as a reference. So first thing we're going to do is talk about what is sustainability, because it's actually kind of a horrible phrase, a horrible word. It's too vague. 40 years ago, when the United Nations held the first global conference on sustainability, the main theme that they came up with is, protecting the future while not destroying the present. And of course, it's impossible for anybody to figure out where they fit in that statement very well. But they developed what they call the Sustainable Development Goals to fix that. And the other main definition comes from the Sustainability Accounting Standards Board, which has developed sustainability metrics for specific industry sectors. And there's not very many of them, so it makes it possible to narrow it down so you're not worrying about the overwhelmingness of the sustainability dilemma for our planet and our civilization. So about 15 years ago, the UN realized that they were having difficulties with this issue.
This is Griselda.
Okay, hello. About 15 years ago.
Tom.
Mute, please, thank you. The UN decided to break down the concept of sustainability into different goals, and they come up with 17 specific goals called the Sustainable Development Goals, or the SDGs. This is very important for anybody that wants to be effective in this space, because the UN's organized the world around these goals. And the reason this is valuable is because it allows you to look at the big challenge of all of these things and pick the things that matter to you and that you can feel passionate about. So if we scan through these, there's no poverty, good health, gender equality. I won't go through them all. You can see different things, but I'll tell you about my own particular interest as a person. I mentioned that I come from the marine biology and marine planning, and I'm very focused on the ocean. The ocean is one of the main themes in my life, and life below water is a sustainable development goal that's very personally important to me. And I'm focused also on clean energy. And so goal number 7 is very important. And now that I'm teaching, goal number 4 is also very important. And these 3 to me are the ones that I really get passionate about. And I'm more likely to put effort into them. But as an organization member, my goals, the organization may be quite different. Now, if we think about where do suppliers fit into all of this, well, here's an interesting one. So goal 12 is responsible consumption and production. Now, every organization is a consumer of material and products from their suppliers. And being a responsible consumer means using these things in a responsible way and helping the suppliers to be better as well. So as a supply chain manager, goal number 12 is important to you. And then there may be other aspects that are particularly interesting as well. This is a very valuable slide to put up in front of a group of people, especially a large one, and ask everybody to take a couple of minutes to pick the two ones that are most important to them and then write them down. And then you can go through the group and say, who voted for number 1, and see who puts their hand up. And you look around the room and you'll see a bunch of different people have that hand up. Well, those are your new friends. You agree with these goals. And so it's a great way to see who else you can connect with around things you care about. And as an organization, you can make a statement that your group is focused on specific goals here. And that makes you a partner now with organizations around the world that share the same goal. And it makes it a little easier to connect on a global level and have a really interesting discussion. What matters to you and what matters to your organization? So what's sustainability for business? Okay, well, the best way that's defined these days is through the Sustainability Accounting Standards Board. They were formed about 15 years ago. And their goal was to define sustainability issues that are potentially material for US public corporations and to investors who want to know how these corporations are doing. And they had a very long consultative process, all within business. This is completely not regulatory. There were very few environmental-based people in all of this. This was all business to business. And so SASB said a factor is material if it meets one of these 5 factors, 5 descriptors rather. It's financially relevant. You know, if it's not even 0.5% of the business, maybe it's not worth paying that much attention to at this level. It's normative in that it sets a direction for behavior. In this case, we want to improve our performance on these things. Make it better, not make it worse, not leave it alone. Normative is improving it. Consensus-based means that most of the experts in the particular topic or sector rather agree that these are the important things. Number 4, it's actionable. You can really do something about it. If it's not actionable, why are you working on it if you can't change it? And then finally, is it open to innovation? So SASB's team sat down with representatives across 77 industry sectors, basically covering almost every part of industry and commerce. And they came up with this structure. They've identified 5 major pillars for sustainability issues, and they are the environment, and then social capital, human capital, business model and innovation, and leadership and governance. And then with each one of these, they broke it down into separate elements. And then they developed these into having standards of specific types of performance. And the point that they're making here is that every sector is different. You know, mining is different from restaurants, is different from air transportation, different from technology or internet, companies. So some of these will be relevant and some will not. And the point that they're making here is you got to go through these and identify the ones that matter to you And then you can start sharing information. And notice, where does supply chain pop up? It's under business model and innovation right here. So supply chain management fits in with design and life cycle management, business model, material sourcing and efficiency, and also physical impacts of climate change. And here we're thinking very strongly about how changing the materials that flow through our companies and our organizations can have an effect on overall climate behavior. So SASB is now part of a larger organization called the Values Reporting Foundation, and it's been a big bureaucratic love fest, which is far less interesting than what SASB is doing on its own. These standards may change in the future, they probably will, but this is the basis from which we're going to launch our own discussion today. These are the things that you can worry about as a sustainability and supply chain manager. So how SASB works is they've got 77 different industry sectors organized into some major categories. So some of these categories are consumer goods, extractives and minerals, financials, and food and beverage. So you pop on that little arrow and it opens up food and beverage into agriculture products, alcoholic beverages, food retailers, meat and poultry and dairy. So these are all sectors within that universe of 77. And they've identified the specific metrics that are important for these sectors. So if everybody in alcoholic beverages is using the same metrics, then you as an investor or a buyer can compare the performance of them head to head. So you're not trying to compare, mining to restaurants. You're using something that's relevant to these folks, and it reflects competitive advantage. So restaurants is one of the food and beverage ones. So let's take a look. So here is the sustainability accounting standard for the restaurant sector. And they have agreed as a consensus that these topics are relevant. There's energy and water management, food packaging and waste, food safety, nutritional content, and labor practices. Each of those is subdivided into specific types of metrics. So for water, total water used, total water consumed in different regions, and specifically in places with high water stress. Obviously, if you're in Texas out in the dry country, water is a whole lot more important to you than if you're in Ohio, sitting on top of one of the biggest groundwater reservoirs in the world. And again, they've taken and broken it down into the units of measure for each one of these with a backup technical guidance. So when you say, okay, I'm in a sector, and I'll just pick something out loud here that say aerospace manufacturing, that goes into the aerospace manufacturing sector because planes are a big deal. And you'll find metrics that are laid out here that you can be using so you can see how your performance stacks up to other companies in your sector. And I think this is fantastic because, of course, you can take this to each of your suppliers, knowing what their sector is, and say, here are the things that others have said are important, and let's have a discussion to ask if you think they're important. And you can have a really good dialogue that way. And why are we doing this? This is the goal of all of this. It's to get these elements and the money associated with them reflected in the financial statements. And I'm just going to be, you guys know this just like I do. If it's not getting measured and reported, it's not getting managed. So let's see how we can blow up a financial statement and expand it to cover more of these sustainability factors. And let's start with the fun one, which is making money, revenues. So of course we have some amount we get from selling products, but what amount of that comes from specifically sustainable products designed to be more sustainable? And did we make money from selling byproducts? For example, remember Henry Ford used to sell wood from the boxes that he bought engines in to other people to use in making parts. How much can you make by recycling other things? Can you make money by selling carbon credits based on either your emission reductions or your production of renewable energy? And can you sell the renewable energy for money? And can you get free money from governments? Keep in mind that when you're doing sustainability investments, the governments want you to succeed. They agree with this mission. And there are a lot of subsidies. In fact, now with the new administration's massive infrastructure investment bill, there's more money for sustainability investments in companies than there ever has been. And if it's out there and it's free to get if you just apply, why is this number 0 if it is? You want that number to be large, free money. Taking again down to the expense side of things, how can you blow it up in sustainable ways? Okay, well, under our cost of goods sold, we can blow open this to say, what's our cost for people paid a living wage and our cost for people paid a low wage? How much are we spending on hazardous materials and local materials and recycled materials? What are we paying for discharging waste and for pollution control? Okay, if these numbers, of course, are continuing to go up, then you've got concerns. If they're going down, you're thinking, okay, we're doing better. And you can do the same thing with other aspects of the expense statement. Under general administration, for example, rent or leases, how much of your expense on facilities is for LEED certified green buildings? If the number is 0, don't you think that's an issue? I mean, you're not using green buildings. Why not? So again, it's a way of having this conversation get started, and it materializes and manifests the data in front of the people who are going to do something about it, namely the C-suite and the board of directors. Now we can do the same thing with the balance sheet. So we have our regular assets and liabilities, and we can blow these open too. So for example, taking accounts receivable, who owes us money? Well, how much of it is coming from local customers and from self-identified green customers? And how much are we getting owed from rebates and refunds? When we talk about our vehicles, for example, how much are we spending on alternative fuel vehicles? Again, what happens if the number here is always 0? Oh, I'm sorry about that. If it's 0, nothing's going on. You say, why don't we have any alternative fuel vehicles? Should that be 0? And then you can look at things like green buildings on your asset sheet. Buildings may be a big part of your physical assets. How much of that is green buildings that are LEED certified? And the land you own, how much of it is in or near sensitive areas that have got climate related or other environmental issues? So you can see how you can take these factors and open them up. And what I've done is I've created up here a simple little scoring system of applicants' level of engagement. So when you're doing this, you can give yourself a 0, 1, 2, or 3 to show you how well you're doing and then total it all up. I'm just doing this as an example. Everybody can do this in their own organization. If you don't do it, ask yourself, how is management going to know what's going on? And what if the numbers are not, what if the numbers aren't available or it's 0 for all the things you want to say? So use this as the goal. You want to know, how are you going to get sustainability data reflected in the financial statements? If you don't get it there, have you actually achieved something that your company can work on? So that's the end of the first module. What is sustainability? That comes from the UN Sustainable Development Goals for everybody, and the SASB sustainability issues for organizations. And you don't have to worry about all of them. You just worry about the ones that are relevant to you and your organization and your community, and you make them visible in the chart of accounts and in financial reporting. Makes it a lot simpler. So then where did this all come from and who made this stuff up? Well, it goes back to the 1980s and even all the way back to the SEC formation in 1933. But starting around the 1980s, they got really busy, and there's 40 years worth of lessons and free resources available to help you. So again, back in 1934, which is 33 and 34, the SEC came up with the concept of materiality of disclosure. For investors, a subject is material if failing to disclose the topic or the information would have changed an investment decision. And this was because before 1934, companies just lied like thieves in their financial statements and in their other information. But now the SEC says if you fail to disclose relevant information, an investor can sue you and get their money back. And that was very important because it leads to the whole concept, what's important in sustainability free, what's material. Jumping ahead in the 1970s, new pollution control and liability laws started raising the cost of disposal and toxic waste management really high. And around 1989 or 90, the cost of in Seattle, where I live, with the company as I worked with, that the cost of disposing a drum of paint waste, a 55-gallon drum of paint waste, went from $50 to $500 in less than 3 years. And the legal liability for doing it wrong went up 1,000%. There was new laws that were, you could criminalize people. And the companies started saying the person who's dealing with the waste is the designated felon, which is a pretty sad title to have in any business. But it reflects the reality that things changed big time then. So that led the US government to realize that companies needed to be focused on moving up the pipe and getting control of this through better technology and management, and not just end of the pipe compliance. So what they did is they created the Pollution Prevention Act of 1990, and that led other states to do the same thing. And this is essentially a policy statement. It's better to prevent problem than to fix it. Go up the pipe, not to the end of the pipe, and you'll have better results. That led the government then in turn to create national and state programs. And the EPA started its pollution prevention program in 1990, and states started doing the same thing. And they provided planning and technical assistance to companies, especially those that had significant hazardous waste and air pollution issues. But they're sending out people now and hiring individuals like myself to act literally as management and tech consultants for free for the companies that are being regulated, because they just need the help. It also led to the establishment of an environmental management accounting network. So back in the 90s, this is when the accountants started showing up. And in 1995, with help from folks like myself, the EPA published its first volume, its first critical document on this, called Introduction to Environmental Accounting as a Business Management Tool. This is about a 60-page document, really easy to read. It's still as current as it ever was, and you can download it for free, and then it's in our catalog. And having watched this, the IMA, the Institute of Management Accountants, immediately said, what the heck is the EPA doing telling people how to do accounting? What? This is our job, they said. So they immediately published their own version of the EPA's publication. But that was the very beginning in 1996 of the accounting community actually starting to publish sustainability technical measurement tools. And it continued from there. But I'm going to just make a note from my story. I got my MBA and also a master's in environmental studies from the University of Washington in Seattle. And I was hired by the State Department of Ecology in their early program to help companies do pollution prevention plans. And I was assigned 112 companies, ranging from Boeing and the University of Washington and the Navy down to a 3-person truck painting company. And we helped them with technical assistance, finding solutions such as better paint and recycling methods and supplier assistance. And I particularly wrote sector technical manuals and environmental management accounting guidance. I worked with the UW School of Business and with Boeing on case studies. I wrote this one. This was a fun one, pollution prevention for Washington State marinas. I was forced by the state to go visit boats. It was terrible. And it turns out marinas are really dirty when they get to paint stripping. And they washed it off into the water around, and a lot of the marinas are started turning into toxic waste sites. On the job doing this, we learned that bad accounting really is unsustainable. First, the accounting systems don't recognize new real costs. And this is still the case. Accounting is always a historical rear-looking system, and new costs show up and they don't get into the chart of accounts. And so where do they go? They go into overhead. And if they're in overhead, everybody pays the pain and the guilty parties don't pay as much as they should. It distorts internal pricing, because there's not activity-based costing allocating those costs back to the functions that created them. We also found out that the CapEx analysis, capital expense investment analysis, was very primitive back then. This was early 1990s, and spreadsheets were still not very common. But most firms weren't using net present value. They were using back of the envelope, just simple payback. Here's an interesting thing to remember when you're talking to people who are doing things the simple way. In an inflationary environment, simple payback will always underestimate the benefit of something that saves money. Because if it's an inflationary environment, it'll save this much money this year, but in 5 years, it'll have saved a whole lot more money each year because it's been inflated. So simple payback always says the good things are more expensive than they really are. And as a consequence, a lot of good, clean improvements that were literally profitable got rejected because they couldn't do their math right. And that's such a tragic, it's tragic. You know, we're dealing with pollution from businesses because the businesses can't do math. And it drives us crazy. So we all develop better accounting tools, total quality management tools for process data, life cycle analysis, total cost assessment, promoted activity-based costing, getting people to use discounted cash flow, and using risk-adjusted net present value discount rates. And this is going to come up again, as you'll see, risk-adjusted finance. And that's going to remain a big deal because the risks that we're all facing are increasing in size every day. I want to direct your attention to a particular publication from GEMI. This is the Global Environmental Management Initiative, a consortium of about 40 massive industrial companies that have been sharing best practices on EHS, environment, health, and safety, for 40 years. And they wrote a very good guide on how to incorporate environmental costs into business decision-making. And this is big business helping big business. There's no environmentalists here. These are hard-nosed folks at the C-suite level, sharing how to do this and then sharing with the world what they've done. Take a look at the GEMI website. And by the way, as I refer to these things at the end of this, I'm going to show you, you can get this whole webinar PDF with all of this, so you have it in hand, just by emailing me later on. So where did all this sort of lead up to? Well, as we said, 95, it was environmental accounting. That led to social responsibility reporting. And then in 2000, another interesting development, Dow Jones launched the first sustainability sector indexes. Now, this is Dow Jones in 2000, getting right into this. And next time you hear somebody say, oh, this is all nonsense, you can say, well, did you know Dow Jones has been working on this for 21 years? And they're not notably known as tree huggers. But it's a very important metric here. 20 years ago, Dow Jones took the flag on this and went for it because they know it works. Carbon accounting came along a couple of years later with the greenhouse gas protocol, which we'll mention later on. And that was a big driver for more growth and impact investment. Investors started looking at carbon emissions and thinking, okay, well, we're gonna keep our money out of the ones that don't have good performance here. But how do we know what's good performance? That led to the Global Reporting Initiative standardizing metrics. And that led also to the sustainability accounting coming up, and with new organizations focused specifically on how accountants can support this. SASB became important around 2018, and the adoption of their standards for materiality reporting are now used widely. And where does it all end up? It's going to lead to enterprise risk management at the sustainability level. And COSO is the organization that has historically written the financial standards for fraud management and fraud prevention. And that grew into enterprise risk management. And now they've moved into sustainable enterprise risk management. And they're saying, don't have a sustainability initiative by itself. Make it part of enterprise risk management so we do it all the time and it's normal. And you'll be pleased to know that the Risk Management Association has a certification course on sustainability enterprise risk management. And you can take an online course for a couple hours and get a lot of great info. My guess is that in 2030, this is what we'll be talking about. It's just going to be ERM, enterprise risk management, and sustainability. If it's done right, it's just going to be a normal part of business. Whole point being that you're going to get benefits out of this. And this is what the International Federation of Accountants says is important from their sustainability framework. It's benefiting the business strategy, the operations, and the reporting. And these are specific elements. And in their sustainability framework, which is a huge Bible of a book, it's a 198-page report. Each one of these has a separate chapter about the role of accounts in supporting it. And I want to note, under business strategy, they have a whole chapter on supplier engagement and what is the role of the accounting team to support supplier engagement. Why is this so valuable? If you're a supply manager, with this in hand, you can sit down with the financial team and says, don't believe me, believe the accountants. They're your people. And this is what they're reporting is the best practice. Let's get up to speed with the best practice from your own profession. We'll come back to see this, but it lets you get a chance to put yourself in the same team as the top accounting and financial analysts in the world. So to summarize, where did this come from? It started in 1933 in the Great Depression, when materiality became a critical element, and the SEC made it legally important. Then starting around 1980, big companies started reporting and measuring on their environmental performance, and now this has expanded to ESG. Overall, the key point here is to say this is not new. This has been an evolution, and it's something that has so much background that we can find all the materials we need. Well, who says they're doing this? Let's find out who has implemented this already. So first line is almost all the large US public companies are now doing sustainability reporting, almost all of them. And they're pushing these standards to their supply chains, and especially for carbon accounting, because as you'll see, the SEC is likely to require it. At the same time, all US insurance companies, as of this year, March this year, are now required to report annually on climate risk management and make those reports public. And the SEC has proposed making this mandatory in public financial reporting, so every public company in America will have to do it, and they're going to go to their suppliers and say, you need to help us. So some quick numbers. The Russell 1000 is the top 1,000 largest public companies in the world. And this company, G&A, says 70% of them were publishing sustainability disclosures in 2020. And I guess that it's at least 90+%, at least now, 2.5 years later. And where do you find these reports? There are websites that maintain databases of them. So this one, sustainability-reports.com, you can choose a sector, your sector for your company and your country, and up pops the reports provided by companies doing it. So if I'm a bank, here's ABN AMRO, I can find out what they're doing for sustainability, or at least what they're willing to tell me. But as you can see, it's quite a number of sectors, and there are lots of reports available. Another database is Corporate Register, where they have 164,000 reports available that you can download, and 24,000 organizations. And the reason this is so beneficial is because you can take this information and put it together and say to your own executives, this is what our competition is doing. And then the insurers are getting involved as well. Over 95% of all the insurers are affected. They have to report every year to the California Public Insurance Commissioner, which has a database of them. You can look up what your insurance company is doing. And they have to say what they're doing to manage risk, including how do they help their customers, how do they help their customers manage risks? And a fun thing to do is to find out who is the climate risk manager at your insurance company and ask them if they can give your company a discount on insurance rates if you have a good sustainability performance. They're very interested because they want to reduce their risk, and they're wising up fast. Finally, the SEC this year made a proposal that all public companies will be reporting on climate-related issues, including using data from the Greenhouse Gas Protocol. It is now it's been out for public comment. They got a lot of comments, as you can imagine. This is a massive rule. It's 500 pages long. It's the same size as the Sarbanes-Oxley law, which caused so much grief in terms of implementation. So the SEC is saying that this is going to have to be included in audited statements, which is going to have implications on who does your auditing for your finances. There's the CFO. The CFO is going to have to get into this. So keep in mind that this is in process. It's an evolution, but it's very likely to happen mostly because the investors want it. And the biggest investors, the institutional investors, are insisting on it. So it's going to happen probably. Here's an example from the National Health Service of England and how they're talking about carbon accounting with the greenhouse gas protocol. The GHG covers 3 levels, scope 1, 2, and 3. Scope 1 is your direct emissions. And so, for example, at NHS, it's on-site fossil fuel use. This is for warming their buildings. They use anesthetic gases, which are actually carbon problems, and they've got a big fleet. Purchased emissions is scope 2. So this is not just purchased electricity, but also could be gas, or if you're using coal, anything. But this is your energy burden. And then finally, value chain emissions, and look where they've gone to their supply chain. So they're looking at their chemicals they're using, their equipment, their business services, food and catering, and they're trying to measure emissions in these areas. And that is all covered by the greenhouse gas protocol, which has very specific technical guidance on how to do this. And you don't try to do this by yourself any more than you should try to fix your car yourself. It's a whole lot safer to get experts in. So we'll come back to visit this, but this is where where supply chain and getting data from your suppliers is going to show up in your value chain emissions. So who's doing it? Well, basically every big company in the world's doing it, and they're going to push it to their suppliers if they haven't already. And impact investors are driving it because they want to be able to compare companies within sectors using standardized metrics. So that's why having the metrics be expressed as a percentage of revenue, for example, is critical because it normalizes the data for size. Okay, and then who sets the standards? Well, there's 4 organizations that are now involved in doing this, and you want to keep your eye on them and learn about what they do. So for technical and leadership of these standards, the International Federation is the top one. This is the global confederation of all the national accounting associations. So in the USA, the American Institute of CPAs and the Institute of Management Accountants and 25 other alphabet soups are all members of this organization. And they've published, as I said, the big sustainability framework. They have a very active group working on this as a working group. And all of your finance people should be aware of what's happening here. In the UK, the nonprofit organization Accounting for Sustainability is focused on evolving the performance of finance teams and processes, helping them mature from we're not doing anything to we're doing a lot. And what are the steps and the processes that have to be worked on? And they're specifically focused on helping CFOs become champions in supply chain management and sustainability. Now, down on the metrics side, we've heard about SASB, and they're focused on investor relevant metrics. And then the Global Reporting Initiative is the 4th one, and they focus on a broader set of metrics for stakeholders, including customers and suppliers and communities and regulators, et cetera, and public utilities, nonprofits, Native people. And it's a much broader system. But let's take a quick look at each one, and we'll go through it quickly. So IFAC got into this in 2005 with their own technical document on environmental management accounting, how to do it. It was based on the EPA documents I mentioned earlier. And it's really about flow accounting. So this is perfect for supply chain because they're looking at the flow of energy, materials, waters, and waste in and out. And how do you measure it? What are the environment related costs? And they have lots and lots of case studies, which is really great. Some related documents are AICPA, the CPA Association, Environmental Sustainability Tools and Techniques. I'm sure all of your organizations have CPAs in them. You want those people to have this document. It comes from AICPA. This is their source. And here's the tool. They don't know it exists yet. So it's up to you to tell them that they can find their own weapons to be great warriors alongside with you. And their sustainability framework, as I mentioned, it's 194 pages. And for each of their 26 specific elements that they cover, each element has a chapter on key considerations for professional accountants. So for everything in the business, every function in the business, these folks have said, here's how the accountants can help. And so this is a great reference. And again, it helps you start talking to the leaders of all the departments. Here's what IFAC says you can be doing. And again, it's a deep dive. I have read almost all of it. I got to admit, I skimmed some pages when I was on 134, 135. But I'd go back to it and say, if I'm going to go talk to somebody in supply chain, I'm going to go to the chapter on supply chain and considerations for accountants. Accounting for Sustainability has produced essential guides, they call them, and they cover a variety of topics, very focused on the finance function. So for example, CapEx and debt finance, finance culture, and they produce maturity maps showing here, this is where we are in this column and this is where we want to be. Processes, governance, performance, and technology all have to evolve in this direction, trying to make them work better. And they have many case studies and their guides are really effective. They've got both step-by-step and case studies from a wide variety of organizations, most of which are English because they're in the UK. They've got a lot of great videos as well. So start looking at their website. And by the way, they want to expand their operations in the USA. They're looking for participants. Maybe your company can be a member and benefit from great input. How to use it, pretend you're the CFO. I mean, be the CFO, for goodness sake. This is who they're targeting. So with this background information, you can sit with the CFO of any organization and help them understand what this is using the language they like. And they've got some very important and very unique guidance. They have one on engaging the board and one on debt finance. And again, they have videos that are worth watching and they have regular new content all the time. I've talked about SASB already, so I'll just cover that, what to do with it. All right, so study the SASB site and tools. There's a lot there. Use the lookup tool to find your sustainability sector and get the standards for that sector. And review those metrics with your company, and if you're an advisor, with your clients. And then help decide if it's useful to make an external report on the metrics. It may not be helpful to have an external report, but it might. Certainly making it externally visible will make it more rigorous and people take it more seriously. And finally, SASB has a certificate in fundamentals of sustainability accounting, which I've taken. It's about 40 hours worth of study and a test. And it's a tremendously educational course. Teaching you so much about the history of this, how they design their standards, and how to use them in general. Finally, the GRI, Global Reporting Initiative, is a nonprofit producing generic and sectoral standards. It's the most widely used system of metrics. So this is looking into the past, some other metrics, but 75% of the global Fortune 250 reported using GRI in 2017, and that number has just gone up. And it's informed by and relevant to a wide variety of organizations, not just companies, but governments and NGOs and others. They partner with the UN Environment Program. And most everybody is now combining GRI and SASB. They're doing an integrated metrics approach. And they don't have to use all of them. That's the key point. You do this by finding the ones that matter to you, that are material to you and your problems and your company's problems. The GRI is divided up into several levels of standard, from the general to the very specific economic, environmental, and social. And again, the point is to look at the issues you face and then go find the standards that are relevant, and then you can get some guidance on that. Here's a great example of the department store Nordstrom's. I'm sure all of you know about Nordstrom's. Well, if you buy clothes like I do. This is their metrics page. This is their dashboard, and they're concerned about human rights, treasury and bond giving, paper use, waste generation, fleet efficiency, water, renewable energy use, and energy use overall. And they've done this in a way that executives can quickly see, are they doing better or worse over time? And again, that comes back to the need for annual financial reporting. If you don't have context, are we doing better or worse than before? You don't have a way to act. Just to show you the variety of types of organizations that use the GRI here in Washington, my home, we have Alaska Airlines and Amazon, Boeing, Nordstrom, REI, Microsoft, Point B, a big software company, Sound Transit's our local train organization, Starbucks, I think you might have heard of them, our Department of Ecology, and a couple counties and cities. And in California, And in San Diego, there are companies that are using GRI. So I hope that you'll start looking out for that, because you can find them online using the GRI's own reporting system. Again, the same way to figure it out, figure out the right sector, use SASB to define the material metrics for the sector, then go find the GRI standards that align with those. And GRI is more broad, so maybe you want to add in someone that are not SASB. And then you can search the reporting databases by your sector to find the published sustainability reports, so you know what your competition is doing, and that will help you make a better case to management. And then show the reports that are most relevant to your bosses. You can say, here's what our biggest competitor and the leader in our industry is doing about sustainability. Go, let's be like them. So SASB and GRI are publishing the most widely used standards, and the IFAC and the Accounting for Sustainability are publishing the guidance how to use the standards. So the financial accounting framework for this really needs to be focused around using annual financial reporting processes and schedules. And you got to bring in accounting staff because they have the data. Maybe water is important to your organization. Well, the water bill is accounted for, and they have the info. It's not like they have to go get new stuff. They just have to surface it out of the chaos. And follow the A4S guidelines and make the CFO a champion, because ultimately this may end up being necessary in financial reporting, either by your company if it's public, or by your customers or your suppliers if they're public. And if they've got a problem, they're going to want to make it your problem, but instead make it a way to collaborate. So again, this back to the SEC, this is what got people having a real fit. It says certain climate-related financial statement metrics and disclosures in a note to its audited financial statements. If they're talking about it in audited statements, the auditors themselves have to be educated in this. And that's causing all kinds of headache. The big four or big eight accounting firms, the Deloitte and the KPMG and the EY, et cetera, are all over this. And by the way, Ernst Young, EY, announced that they're going to pay for all of their professional staff to get a master's degree in sustainability management. And KPMG is going to invest $1.5 billion with a B, training all of their financial staff in ESG and climate risk management and reporting. That's how seriously they're taking it. Your CFO should be aware of this. So the cycle that we're talking about is, let's say it's a standard annual reporting cycle. So your taxes are due, in April. So starting in January, in December, they close the books and the leadership takes a look. Then they start thinking about the plan for the coming year and putting together the team to work on the sustainability aspects and getting those guides and their corporate reports together. Then looking at the different aspects. Here are the 5 SASB major areas. Once you've got data on those, you can start thinking of improvement options, and then putting together a sustainable report draft. Once that's done, you have to have some assurance, and the AICPA actually has a certificate in sustainability assurance, and your own accounting and auditing teams can and probably should go get certified in this, because it's best practice now for being a professional. With the right data in hand, you can start making proposals to invest, to improve internally and externally. And then those proposals get captured in the final report, which goes to leadership. And then you start over, plan, do, check, act. And it's this cycle that makes sustainability practical. In fact, it makes it invisible. As long as we're talking about updating the chart of accounts and making these factors normal, sustainability fades into the background. It becomes part of good risk management and financial management. So how to work with accounting and finance? Again, go to Accounting for Sustainability and review it. They have about a dozen videos by CFOs of major companies like Salesforce and S&P and Verizon. These are the CFOs saying, this is why we are doing sustainability and why I'm in charge of it, me, the CFO. You want to have that information in front of your finance team. And then use the IFAC sustainability report to show how the finance team can help everybody in the organization, including the supply team, do better. And they need to be on the team because they have the data. Then get the CFOs to educate the C-suite and the board and get authorization and budget. You've got to get the money to do it. And then finally, aim for some early wins, such as carbon reductions and other benefits created by things like work from home and energy efficiency. I know a lot of organizations are trying to shove work from home back, get rid of it because they want everybody back in the office. It's absolutely terrible for sustainability to do that. And it's ridiculous. And everybody that thinks it should be done doesn't understand what they're doing. And I'm going to be very blunt about that because the math is obvious. Once you figure out the benefits of work from home on an environmental and energy data basis, it's very clear that this is really a win. And the employees almost always love it. Back to accounting for sustainability. Again, this is the stuff that you need to go through all of this. And I just want to please take the time to look at this. Nobody in America knows these guys exist, but they've been in business since 2004. And all of their material is developed by finance professionals. There are no environmentalists in this crowd. They all think about the environment, but they're all professional finance people. Okay, so we've seen how to organize the data, how to engage the CFO, use annual process for financial reporting, and make sure that the data shows up in the financial reports. If it's not in the income statements and the balance sheets, it won't get managed at the top. So let's talk now about some sustainability resources specifically for supply chain. And you're going to be so surprised because guess who's publishing this stuff? The first major resource is the US EPA, and that's because around 1990, federal government and state government said, we're going to start green purchasing. And EPA then said, well, we have to support this. So they have been working on supply chain management for reducing pollution and reducing toxics use and reducing packaging and reducing energy use for 30 years. And they have covered under a variety of ways with different phrases. And your own state government and local governments have got green purchasing programs. So if you're in San Diego, like most of you are, the San Diego city government has a green purchasing program. Go find out what they're doing. Make friends. I did a quick search on supply chain on the EPA's website and got 1,600 hits on this. And I mean, they really have been at it for 30 years. And they've published a wonderful guidebook, called this Lean and Green Supply Chain, a practical guide for materials managers and supply managers to reduce costs and improve performance. It's focused on the flow of materials and energy and resources through the organization and has quick information about costing, opportunities, and the process itself, and a great bibliography. It's short, it's easy to read for everybody, so they can all be on the same page. It's a free download, so it doesn't cost you anything. It's in the catalog we've signed. Just go look it up. In fact, you can see the publication number there, and it's yours. They also have a supply chain how-to guide. This is an online manual that walks you through step by step by step, get a policy and recruit them, confirm their participation, whole series of steps. They've got a lot of success stories, and your organization can be an active participant. They're always trying to recruit organizations to join in and just share best practices. The other big surprising source is the United Nations. The UN Global Compact was created 30 years ago to work with multinational companies because it's the UN. And it's focused on getting voluntary commitments from these giant companies to behave in a sustainable way. And so there's codes of conduct and signed commitments that help an organization be a part of this family. And thousands of companies have signed up into this, and they've published this guide, Supply Chain Sustainability. This is really interesting reading. It was prepared by a group of at least 100 supply chain managers from big companies around the world with a tremendous amount of review and input. And in my opinion, this is the best single authoritative reference source for practical business on this. This is by business people for business people involving 30 years of input. And again, it's a free download. It's in the catalog, and start going through it. I don't have time to explain it all here to you. The third of the interesting organizations is the International Green Purchasing Network, which is based out of Japan. They're targeting purchasing managers anywhere, and also a lot of focus on the governments. And they have a green purchasing and procurement starter kit online. And it's got a step-by-step interactive implementation assistant. It's a software program that walks you through everything. And it's got video training materials, a bunch of online resources, worksheets, and short videos to download and watch. So this is all free. It comes in a single download of about 100 megabytes, and you can install it on your computer and install it on everybody's computer and say, here's what you need to know. And I think this is, I've gone through it myself, and it's very well done. And it's really focused on process, not on specific solutions, because that's what we all need. We need to have the process. And when we get to technical solutions, that's when we switch over to the next topic. Now, to recap, the US EPA and the United Nations are the two biggest suppliers of really high quality supply chain management guidance. And you want to begin by helping your suppliers account for their carbon emissions specifically. Once that's going on, then you can expand it to cover other items to reduce risk and improve performance. So where do you find the technical solutions that you need? Well, let's get into this. Pollution prevention and cleaner production are the keywords that unlock thousands and thousands of papers and publications on how to do things better. You need to know these words so you can find your organization's industry solutions. I call this the hidden world of sustainable business solutions. And you get in by using two magic phrases, abracadabra, hocus pocus. In this case, pollution prevention is the phrase invented by the EPA in 1990. It was adopted in every state. And the state programs focus both on regulation and technical assistance, but importantly, it was adopted in Canada also. So pollution prevention is a phrase about better management and better technology for better performance, and it's only used in North America. At the same time, over in France, where the United Nations Environment Program decided pollution prevention is not the phrase they want to use, maybe because they're all French. I shouldn't say that. But they started using the phrase cleaner production. And that means to make everything in a cleaner way. It turned out to be an unfortunate phrase because a lot of people think you're making soap, you're making cleaners. And that literally was an issue. But they created cleaner production programs in 48 countries, which have been publishing the solutions they come up with. And so when you're looking for solutions for your industry, you start off by looking for pollution prevention solutions, searching in North America, and cleaner production everywhere else in the world. And if you don't use these words, you won't find a huge amount of stuff. Let's take a look at restaurants. So I've done a Google search here for restaurants using pollution prevention in quotes, and over here using cleaner production in quotes. So using this search, I come up with 776,000 hits. And I come up with, on cleaner production, I come up with 530,000 hits, and they're all different. None of them overlap because nobody uses both phrases at the same time. These are all from North America, and these are all from everywhere else, of course, published in English. So when you're looking for solutions that are technical, you want to search for your sector name. Maybe it's aerospace and pollution prevention or cleaner production to get access to this. And the reason this is so important is the phrase pollution prevention and cleaner production were both terminated about 5 years ago by both organizations, EPA and the UN. Now they've renamed them. And it's now, for the UN, it's now called sustainable production and consumption. But if you search for that, you won't find much because it's new. You got to go back and use their old phrase, cleaner production. Same thing with EPA. They don't really talk about pollution prevention anymore. It didn't work as a marketing term. So this is where you find the goods. And if you don't know the right keywords, you'll never find the Alibaba cave, abracadabra. I want to let you know about the Journal of Cleaner Production too. This is the world's leading academic journal on this topic. I did a quick search for heat pumps to see what came up, and I got 3,300 results. Heat pumps are a super way to make ourselves more energy efficient. And they also have a new journal, Cleaner Logistics and Supply Chain. And isn't that nice to know? So here you go. We have this has got representation by academics and some others, industry people around the world. It is very academic, but it's got lots and lots of really innovative thinking, and also lots of very process specific stuff. For example, how to recycle dye in textile factories. Given a specific dye chemical, what's the process to be able to reuse it? And you get a bunch of chemists publishing a paper on it. So once you know about that, you can search for sector and topic and start finding useful stuff. So again, you want to look for your sector name and these two phrases, pollution prevention and cleaner production. Find the published reports from leaders in your sector. Use the Journal of Cleaner Production to get advanced solutions and thought leadership. Maybe get your R&D department noticing that they can publish in these things. And think about this interesting point, and this is true, it's unusual. You know, when you're talking about competition in an industry, you know, the companies are not willing to share technical solutions because it's a competitive advantage, unless it's about sustainability. And across the board, we always see that when it comes to sustainability, like saving water, reducing energy use, eliminating chemicals, companies are happy to cooperate because by doing that, they're reducing the environmental footprint of the whole sector. And that keeps the regulators off their back. So it's the one area where your competition is usually ready to tell you what they've done that works. So finally, coming to the end of our show here and talking about sustainability accounting and the supply chains, it's an engagement process. It's not about just data collection. You want to find, manage, and measure only the metrics that matter. Don't go overboard. You don't have to. And carbon accounting is the most universal and standardized metric, so you start there. And it's a lift, I'll be honest, you know, I'll show you why. So the first thing a company should do is hire or train a project leader to get this going. Remember, this is something of a temporary position. It can be a reassignment of an executive, or you can bring in someone and train them up. But someone needs to kick this off, and then it'll transition into regular business. The leader needs to train the C-suite and the board if you have one. And this is where accounting for sustainability really comes in, with great videos from CFOs talking about this. Then the next thing to do is to hire a carbon footprinting expert. This is quite technical. You do not want to learn how to do it. I refuse to learn how to do it. I'm 61. I'm too old for that stuff. I want to find a nice 30-year-old with a master's degree, and they're going to do it for me. It's good to think about having somebody come in and do this as part of your facilities team, because they have all the facilities data that's relevant to carbon usually. But it's a specific thing you're going to need to have. There's a lot of demand for consultants in this now, so it's important to start your search for someone to help soon. Then look at each of your suppliers, each of your important suppliers, that is, and identify their sector. Then find those SASB sustainability metrics for the sector, and find the published reports on sustainability for the sector from the companies that are already doing it. So you know what the metrics are and what are people doing about it. Then propose a partnership with the suppliers to help them improve their sustainability metrics. You can say, well, okay, you guys are supplying us with industrial chemicals. Well, the chemical industry has these metrics. We want you to know about them, and we want to try to work with you to help us all do better together. But start with the carbon. And the reason is the reductions in carbon emissions usually save money because it's energy efficiency. It may be some other things, but it's usually energy. And saving money makes everybody go, hey, this sustainability stuff is actually paying off. And you can add other metrics after building the engagement strategy. So finally, reach widely for free help for yourself and your supplier. I mean, who would have thought you could reach out to the EPA and the United Nations to find out how to help your business with supply chain management? Really? Last thing I would have thought of, but it's there. And there's 40 years of resources that have been published that you can access. So what do you do next? Well, I would recommend organize a group to watch this webinar. so that you get all the same basic orientation. Watch those videos by CFOs from Accounting for Sustainability. Discuss your interest in specific sustainable development goals, the SDGs, for yourself and your organization, because it's a great way for people to realize there's something they can do. You don't have to go into what I would call climate panic. You don't have to go into fear for the future. It's going to be a challenge in the future, but there are specific things you can do in partnership with others, and you're not alone, and you can take the piece that matters and make it better. And organize a leadership discussion and a path forward so that you have all the top people supporting the system. And that's the end of my presentation. Thank you for watching. I don't know how much time we have for questions. I'll be available for the next 15, 20 minutes. And I invite you, if you would like to get the PDF of this presentation, all these slides in a PDF, email me at bird@sustainability.cpe, and I will email it right back to you. And I'd like to hear from you, your comments, good or bad. How can I make this better? And if you have any just thoughts you'd want to share. I want to thank Preston and the team for inviting me to do this. As you can see, I'm feeling at home, and I'm glad to be able to contribute. Thanks, Preston.
Yeah, Bert, I saw an earlier version of this, and it blows me away. I'm excited. There's so much here. I think that we all could sit down for a few months just to get another level below what you presented today. I mean, there's so much useful stuff. Any questions?
Bert, really enjoyed your presentation. I was intrigued to learn about the history of all of this starting in 1933 and 1934. So that was an eye-opener for me. But Bert, I also picked up a number of ideas and documents, sources of documents in your presentation, including that spreadsheet, that listing there. And I'd like to grab a copy of that and put it in our curated section as well.
Happy to help. Just let me know.
Thank you. Thank you.
Good. By the way, just to add one thing that has happened recently, and I don't think was included in the Bert's presentation, but there's a press release dated September 29th in which the Federal Reserve Board announces that 6 of the nation's largest banks will participate in a pilot climate scenario analysis exercise designed to enhance the ability of supervisors and firms to measure and manage climate-related financial risks. So we're now getting down to the bank level of scrutiny. So people have got to get ready, or they'll be in deep trouble. They won't get financed through the local bank.
Well, I'll throw in an interesting point related to that, is that, every company has a banker and an insurer. And why not go straight to those people, to your agents that manage your account, and talk to them about this? Because they may turn around and go, well, we actually do have a sustainability policy, and gosh, it's great that you're interested in it, and let's continue talking. Having a better relationship that way leads to better financial dealings with your bankers and your insurers.
Sure. You get priority if you have a good relationship.
That's absolutely the case. Yep. Yeah. And better rates even.
Guys, if I can chime in here on behalf of Nicolo, speaking about accountants and supply chain for what would help them, how do you see the current opportunity to implement blockchain-backed solutions?
I don't think it's necessary. And the reason is because the issue of data security and verification in this topic isn't as critical as it is in things like financial contracts, et cetera. For example, you want your suppliers to be giving you information about their emissions because you need to consider it in your own footprint. But are you worried about somebody stealing that data and exposing it? Not really. It's not like customer data. So I don't think it's going to be that important. I think that blockchain eventually will kind of take over all kinds of reporting chains for its obvious security opportunities. But I wouldn't worry about that now. There's other people that are trying to figure that out, and they're going really deep down a rabbit hole where normal people, I'll say normal like us, where normal people don't even know enough to discuss it. So I would say that's something that might be more relevant 5 years from now than it is today.
Well, I agree, but more than having security from a customer data perspective, also, for example, companies considering that, like for example, at the very beginning, like you said, having the barrels of waste that companies need to pay for in order to take care of them. Some companies may be cheating their data on the accounting. We've been seeing, companies cheating on their accounting, on their tax. On the tax purposes and so on for quite a long time. And blockchain may be able to block these things to happen thanks to the fact that it's a blockchain and will be impossible to change the data once uploaded into the blockchain. So I thought this will be quite interesting.
Fair enough. Like I said, the security of it will be important once the data itself becomes more important, but it's the quality of the upload in the first place that is really,
absolutely, yeah.
That's where you got to worry.
Right.
And that's where it's all about having a really good relationship where they don't want to cheat you. Okay. And that's why it's really important to get top to top level communication. You want the boss of the company talking to the boss of the supplier. Okay. Because that's where the supplier is looking at this fellow saying, oh, I might lose this contract if I don't do my best. So, right. So again, this is why a supply chain manager can go to the CFO, get the CFO on the team, and then together you can get the CEO on the team. It's very hard to get the CEO on the team if anything that comes up from below. And so but using the CFO as an intermediary is valuable, especially if the CFO realizes that the company's financial auditors may need to know about this stuff. I want to say thank you very much. This has been a lot of fun. You can tell I'm enjoying it. And if I can be of help in the future, let me know and keep me posted about those team meetings, Preston.
I will.
All right. Well, I'm going to sign off. And
thank you, Bert.
Thank you very much, everybody. I hope to see you in San Diego one day.